You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back.
Thanks for having me. Glad to be here.
Do you have a special offer for our listeners?
Yes, for House Street podcast radio listeners, we have a 50% offer, which is good for new subscribers only. Or VR, that's Victor Robert, VRTrader.com, which is a shortcut to the Leibovit VR newsletters. Go to an order page, pick your newsletter, and enter the promo code 2022 half off, and you get half off of any newsletter you sign up for. And I also make that disclaimer, as I normally do here on the air, that I'm not a financial advisor, nor do I provide financial advice.
So what's going on the stock markets right now?
Well, it's interesting because, if you recall, last week I was talking about, even before that, the impact of the upcoming Groundhog Day, and most people laugh about it. Don't even really talk about it at all, but it sure turned out, because that weekend it was the groundhog came out, saw a shadow, at least in the Punxsutawney groundhog in Pennsylvania. There's several others. There's a whole report I put in the newsletter, because different groundhogs apparently we're not seeing their shadow depending on where they stood, but the Groundhog Day generally, or around that time frame, manifests volatility in the market, and we got that the day after Groundhog Day, where the market had a sharp sell-off, and I anticipated it, prepared for it, profited from it, and talked about it on the broadcast and in my newsletter. So this is a time of year where there's cycles at work that are coincident with Groundhog Day. It's not the groundhog, obviously, so it has something to do with this date. It dates back many years. There's a long history, and it's described in my newsletter, and you can Google it about what happened, why Groundhog Day even exists. And it's part folklore, part real customs going back, I think even centuries in some instances. So the cycles at work here said you got to be careful, and sure enough, we had a little bit of trouble. And we're not totally out of the woods, because this first quarter, as I mentioned several times, could offer some volatility here, and even big names like Apple Computer and NVIDIA, had nice sell-offs here in recent days. Volatility all over the place. Tesla came down, rallied, came back down again. A lot of fun stuff going on out there for those who think the market can go up every day. But this first quarter tends to, generally speaking, offer some volatility. And, of course, we've got the vernal equinox in mid-March. And I'm always a believer that there's change points around that time, many of which have been big lows in the market. And even though we have entered a time period of a return to common sense and prosperity with Donald Trump in there, and a lot of reasons to be optimistic. Markets do what they do, and cycles do what they do, and groundhogs do what they do. And, regardless of the fact that I think that we're overall coming out of this in a more positive way, bigger picture, there's going to be some volatility. So, but the other thing to consider, some of the things, that are going on out there. For example, we have bullish catalysts coming ahead where corporate buybacks could be talked about here. Or the window actually closed for buybacks. The window actually closed on January 24th, but there are more and more companies who are going to be announcing, executing buybacks, and this is, the part of, unfortunately, manipulation, financial engineering on Wall Street, that when companies, buy back their stock, they reduce the supply of shares, and that drives the prices up. So it's another form of Wall Street manipulation. So as more companies announce buybacks, taking the flow, instead of putting the money to work in their companies or expanding or doing research or paying their employees or whatever the heck they're supposed to be doing with their money, they like to buy back their stock instead, because, like I said, it drives the stock price up, and that helps stock options, corporate executives that have, big share positions in their companies. So it's a financial engineering scheme, which unfortunately is still going on, and Wall Street encourages it. It's something that needs to really be looked into. was up to me, I probably would ban corporate buybacks and tell the companies that they need to put their money into more useful, productive purposes, even give it to charity versus buying back their own stock. So, I'm definitely a non-Wall Street person in that sense, but that's coming up, and that, could, provide more of a catalyst for, higher prices ahead. So I think overall, the year is going to be positive. The January barometer came in positive, Jim, up for the month versus the close of December 31st in the S&P. And that's, I think it's about a 70% accuracy rate. So net, the year will probably be up, maybe not to the extent that we saw in 2025. And with all the significant changes that are going on in our government here in the U.S. and possibly in your government in Canada as well, more conservative leanings and, a move to again, to common sense versus extremism and wokeism and all kinds of nonsense that I think, net things will be better. And thank God, we've got people like Elon Musk out there, not only being a technical genius and the Edison of our time, getting involved at his own time and expense and frankly, personal risk because of all the nutcases that are out there that I'm sure would like to take a pot shot at him, just like they did with Donald Trump. But, we got the guy like that. He's looking into the Doge movement now in government to try to find extraordinarily inept expenses and procedures, and he's uncovering that now, and it's all over the television, crazy places that money has been spent. And the list is like unbelievable. I don't know if you've seen it in the news, but if I could just list all the items as I've read, you almost fall out of your chair when you read how money has been spent by the government that are totally, out of line is the best way to describe it. So, with all that happening, I think net, it's like anything else. Timing is important, where you get in and what prices. But I think, the trend probably is still probably okay for the year. And if we get, a little bit more of a shakeout here in the first quarter at some point, further than what we already experienced, no guarantee will happen, but cycles say that's your risk here, at least for a few more weeks. Then I think, we're okay for, higher prices during the year.
What's going on with gold?
Well, new all-time highs. Didn't surprise me. And as you know, we've been talking about February being a possible cycle top or strength into February, which is seasonality. But bottom line is gold hit record levels because central banks have been buying gold at an eye-watering pace is the best way to describe it. The bottom line is, they continue to get out there and buy gold. The World Gold Council reported that purchases accelerated sharply in the fourth quarter. China and Russia have been out there for years, and the individual investors as well. And so here we are, but nowhere near where we ultimately will be. The concern, from a trading point of view, is that, do we hit a little top here in this February time frame, which would normally be the case, and pull back for a bit? I'm not telling you to sell your gold, just as a trading comment. A trading top of some time in this period wouldn't surprise me. So still overall positive, and I think at some point we could see some real upward acceleration in the price. It's been dragging along for years, and of course we've had some nice gains this past year, but there might be, like the advance we saw in Bitcoin, where it suddenly explodes in some dramatic fashion, and suddenly it's up 30, 40, or 50% in a very short period of time. I mean, that could unfold here in the next several months or a little bit longer, where suddenly, instead of having a $50 move in gold one day, you suddenly have a $300 move or $400 move, some dramatic move that just shocks the heck out of traders. That could be happening. There could be a squeeze here because apparently a lot of physical gold isn't as available as we all thought, and a lot of the numbers that the government says are out there in terms of what they hold in, there's in store or in secure places may not really be there, and there's been a lot of leasing of gold and all kinds of shenanigans going on, not to mention open manipulation of the price on the part of governments, which GATA.org, the Gold Action Trust Committee that I'm always talking about, have documented over the last couple of decades. So the net result could be a real squeeze here. So I would hang in there, big picture. As a trader, maybe we get a pullback here. So that's sort of where I'm at. Just stick with the trend. I mean, if we're looking at gold at $4,000 or $5,000 an ounce or some really major number, then I'd probably be more inclined to ring the register than at these prices, where I could see that as a potential target in the months and years ahead.
Is silver going to join the gold rush?
We're keeping our fingers crossed, Jim. It already should be at $50, and it's not. That's where it was twice already in the last, couple decades. Some are talking, you could see 100. I don't know. It moves in sympathy. Even copper's starting to uptick here a little bit. Metals are starting to, platinum and palladium have been moving a little bit. So, the move towards commodities, is still, a big picture positive trend in my opinion. Silver, I would bet that if gold really has that kind of move, it easily get back to that $50 level, and whether we're going to see the $100 or more that the bulls have been talking about. Of course, it could surprise us and do even better than that. So, yeah, I just bought some more physical gold in the last few weeks just for the heck of it, because I like the coins. I like looking at the coins. So I think it is cheap, relative to where it's been. So at some point, the panic will set in, this is the time, and it runs up real big. So you want to have your foot in the door. So, yeah, I go out and buy a bunch of silver coins and at least put them on your desk and look at them. Many of them are very attractive looking, and maybe they'll turn out to be a profit center for you in the next year or two. I mean, look at the percentage possibilities. I mean, if it goes from 30 to 40, forget 50, you're still talking 30% on your money. So that's not bad.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's the story with cryptocurrencies right now?
Well, I would encourage all of our listeners to load up on them. It's like anything else, dollar cost average by a little bit. It's fixed amount at fixed time, so you're not always buying the same price. Hopefully you buy it cheaper, and you average your position. So Bitcoin, the big one, I still think, I would hope that it could correct a little bit more back down to $75,000 or something in that area, the breakout level. It may not do it, but it is headed higher. A lot of forecasters are not a lot, but some are talking about 250,000 for the coin, others $1 million. Some are more conservative, looking for 140,000. Donald Trump is behind it. Been talking about Bitcoin reserve, so it's a no-brainer. I mean, it's in fashion. This is it. This is no BS. This is not Bitcoin at 20,000 going back to 4,000 type stuff, which we had a few years ago. So where we're at is we're in the 90s. Your risk is into the 70s, and your potential is anywhere from, who knows, 140 to 250,000 or more. And coming, I can't give you a time frame. Could be 2 years, could be 6 months, could be 5 years, could be 6. Who knows? It's a volatile market, and so be prepared on any shakeout to be there. And it's not just Bitcoin. There's so many of the smaller coins, including Dogecoin, which Elon Musk has been talking about in recent years. Is only trading around 30 cents. I think it was as high as 70 or 80 cents. I definitely would be in that. And the big one everybody's been talking about, and a lot of my friends have been talking about and researching for the last several years, is Ripple's XRP. And Ripple itself is supposed to go public this year. So who knows what that could do? The experts that are behind the XRP saying that could be a new standard for crypto standardization for exchange of business currencies, that business activity, and all kinds of stuff. So that's trading now about $2.50. The last I looked at it, it was low as 35 cents in the last year, believe it or not, and got up to about 350 area. Now it's around the 250 area. So I'd take a look at that. And there's a whole bunch of them if you go into our newsletter that you should own. And many of them are trading for pennies, like the Dogecoin and others. So some feel, and I sort of shared this view, that the real wealth could be is to be made. There's real super life-changing type wealth. And a good friend of mine who I work with, who's an expert in crypto and so forth, that's been an analyst for many years, has been talking to me about this for quite some time too. But feeling that this could be a life-changing opportunity. For example, if you own one of these, even the XRP, which went from 30 cents to $3.60 within 1 year, almost 10 times on your money. Imagine if that happens with any of these other coins, or Bitcoin continues up. So the kind of gains that are out there, potential gains out there, far exceed the stock market, is what I'm trying to say. So you get another year in the stock market, and you have a real good year, you have 20%, and it could be 6% or whatever it is, and there's always individual stocks doing their thing anyway. But, imagine, these coins, go up another 1,000% in the next year or two or three. I mean, you're not going to see those kind of gains in stocks. Some individual stocks you might. In fact, getting off on a tangent, out of the blue, we saw a couple of the cannabis stocks take off today, talking about percentage gains. Aurora Cannabis, which is originally, as you know, a Canadian company. The stock had a nice move today. Big volume actually was both today, Thursday, and yesterday, Wednesday, and apparently it's attributed to the Robert F. Kennedy approval in Congress, U.S. Congress, because apparently he's sympathetic to cannabis. So here's a little $3 stock that went up to 5.5 today, and I think Canopy Growth reports earnings tomorrow, and I think Aurora had some positive earnings, which also attributed to its advance. But if there's a feeling that RFK is sympathetic to cannabis and he's trying to do a makeover for the pharmaceutical in an industry which needs a big makeover, if not an eradication, in my view, for all their criminal activity in recent decades. But besides that, there could be, some new life coming into the cannabis sector, because despite anything you might hear or read, there are benefits to cannabis. And unfortunately, there's been government setbacks to its continued success, most notably the DEA scheduling marijuana from scheduling it number one as a very dangerous drug, which it's not. And there's been a hold-up. Apparently there's some internal conspiracy at the DEA among officials there to not reschedule it down to 3 or lower where it should be. And the U.S. Banking Act was never passed, which now hopefully could be to allow free exchange of dollars. Here you're limited. When the U.S. government says it's an illegal substance, the IRS taxes you in a correct manner, for example, on your inability to deduct expenses because supposedly you're an illegal business when you're really running a state-approved business. These are not Canadian issues. These are mostly U.S. issues. So maybe there'll be something going on again with little cannabis stocks out of the blue. Another interesting story, which I like to throw out at you, is, as you probably had read in the last year or two, there's been a potential buyout on the potential of U.S. steel being sold to Nippon Steel. And Biden, in his wisdom, and even Donald Trump has made statements that it would be bad for the United States for a big company like U.S. Steel to be controlled by a foreign entity, Japan. Well, there's so many foreign entities that own so many businesses already in the United States, and a list it would take you pages and pages to go down the list. So it's not unusual at all. Not to mention the Chinese acquiring all this U.S. farmland and all this other nonsense that's been going on. So what I'm saying is there might be a turnaround here on the U.S. Steel story. And what I'm reading is the Prime Minister of Japan is visiting the next couple of days with Donald Trump. And there might be a play here for U.S. Steel again. And it's obviously considered a valuable asset because other companies are looking to buy it. And the Japanese government is obviously interested in it. And I'm sure that there could be some action there. So just something to keep an eye on. We have it on our list. So there's always something every day going on in the market. But another thing to real mention, too, is that we've noticed the bond market upticking the last few days. And forget the Federal Reserve, because I have very little regard for what they're saying or doing. It's the U.S. publicly traded bond market. So And the big story tomorrow is supposed to be the Bureau of Labor Statistics labor report. And the concern is that if this strong labor report reported tomorrow morning, increase in jobs and so forth, showing the economy is doing great, that would deter the Federal Reserve from lowering rates, which is really funny because when the Federal Reserve was created, it was created to provide economic stability and full employment for the United States. So here they're saying if there's full employment, we're doing great. We're not going to lower rates. We're going to continue with this high rate policy. So, the reason why the Fed needs to be looked at as a viable institution. But the labor statistic numbers are coming out tomorrow, so it'll be interesting how the market interprets them. But at least for a couple days prior to today, the big bond market, which is the 20 and 30-year bonds, have been upticking, which is a little more bullish in the sense that would mean lower rates versus what the Fed is telling us. So either the bond market knows something or just a blip on the chart. So that'll be interesting how that plays out. So a lot of jello on the plate here, Jim. A lot of stuff moving around, a lot of interesting things happening.
Anything interesting on the geocosmic front?
We can't even get started on that one. There's so much going on. It's really, really interesting. You should bring up that. So anyway, there's a big solar flare underway now, and it's called an M7 class solar flare. And there's been about 20 of these this past week, believe it or not, coming from our wonderful sun. And so far, none of them have struck the Earth. But there's a lot of activity going up there and around the sun. But there's a little bit more interesting story, indirectly or directly tied to that is as you know, Elon Musk is responsible for launching a bunch of Starlink satellites in the recent years. And from what I read, I think it's about 7,000 of them up there, some incredible number. So there's been about 7,000 in Earth orbit. And apparently, in January alone, about 120 of them have deorbited. That means they come crashing down to the Earth as little fireballs. So we're losing a bunch of Starlinks. And is this just a normal attrition of the Starlink, or does it have to do with solar activity, which can affect the satellites? But there's sort of a side story to that when these things come down, some of the emissions that come out of the reentry of these satellites, when they burn up, somehow eats away on a small degree. I think it's some 30 kilograms of aluminum oxide is generated, a compound that eats away at the ozone layer. So as these satellites start coming down and burning up, it's sort of detrimental on a certain level. So, it sounds great, and I'm a big supporter of Elon Musk and what he's trying to do, but apparently the technology is not all there that we start losing, 100 or so more a day of these things. They are continuing to launch more of those. So the impact on the planet, particularly if it's any detriment to the ozone layer by them burning up as they re-enter, whether it's because of just internal wear of the satellite or the solar impact on it. But there seems to be some connection between solar activity and the satellites. So, yeah, it's a sort of interesting side story, but it's important, and it's something I'm sure Elon Musk is more than aware of this problem. So it's just that's the big story on the geocosmic that I saw today.
Mark, thank you so much for chatting with us.
I love it. Have a great weekend. Thank you.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark or for any of our guests, you can send them to info@housestreet.com. Find us on X @HouseStreet. On YouTube, we're Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.